Hello and welcome to tonight's Legal Hour brought to you by UNSW Law and Justice. The topic for tonight's Legal Hour is Central Bank Digital Currency, a Global Game Changer. I want to begin tonight's proceedings by acknowledging the traditional owners of the lands on which UNSW campus sits, the Bidjigal people of the Eora Nation. And I pay my respects to their elders past and present, and I want to acknowledge and extend a particular welcome to any Aboriginal or Torres Strait Islanders who are joining us tonight. Welcome to the second Legal Hour for 2022. Legal Hour is an event we create for the alumni community of the Faculty of Law and Justice at UNSW. We love Legal Hour as a way of connecting with our alumni, and even though we are post the COVID era in many ways, it's been important to us to keep a Legal Hour that's an online discussion, because we know that enables so many more of you, wherever you are, placed around the country and indeed the world, to dial in and connect with us. And that's a really important priority for us. So we're glad that you're joining us tonight from wherever you may be. My duties at the start of this event are very simple. I'm going to introduce the moderator, who will then in turn introduce all participants and conduct what I'm sure is going to be a fascinating discussion. And it's my pleasure to introduce my colleague, Professor Ross Buckley, who will be performing the moderator duties tonight. Ross is a UNSW Scientia Professor in the Faculty of Law and Justice and a member of the Herbert Smith Freehills China International Business and Economic Law Centre, or CBLE. Ross is an ARC Laureate Fellow and the KPMG Law and King and Wood Mallison's Chair in Disruptive Innovation. He's also chair of the Digital Finance Advisory Panel of ASIC. Ross's principal area of research is in international regulatory measures to increase the resilience and stability of financial systems. His current ARC, Australian Research Council Laureate Fellowship, explores how Australia might best regulate the rise of data and its analysis so as to seize the related benefits while managing the many risks. Ross, over to you. Thanks.
Thank you very much, Andrew. And we've got a great panel tonight. I think importantly, we've got three people who don't always agree with each other, so it should be a very fruitful discussion. We have Ursula McCormick, who's a partner at King & Wood Mallisons, and Ursula has actually been building transporter CBDCs in the M-Bridge project. We have Professor Barney Tan, who's head of the School of Information Systems and Technology Management in the Australian School of Business. And we have Michelle Levine, who's a partner at Hamilton Locke, who advises on these issues regularly. So I thought I'd begin by very quickly taking us through some of the terms, because I think this is a difficult area to talk about. And we're a little bit Alice in Wonderland still in this. Sometimes people use words knowing what they mean, but other people don't agree with the meaning. So it makes discussions difficult. So in a few minutes, I thought I'd run through 5 things: cryptocurrencies, crypto assets, stablecoins, CBDCs, and NFTs. Cryptocurrencies, we think we know what they are. They're Bitcoin, they're Ether, there's thousands of them. They're badly named though, because they're not a currency, right? Because a currency is a medium of exchange, a store of value, and a unit of account, and they only work as an instantaneous medium of exchange. Their value bounces around too much for them to be a store of value or a unit of account. And we have this system where we have money laundering, terrorism financing regimes that make banking really expensive, and cryptocurrencies run in parallel and allow criminals to circumvent those regimes. So I'm not a big believer in the long-term future of cryptocurrencies. I think they're better off called crypto assets, which is what ASIC calls them. And this is where it gets even trickier, because cryptocurrencies are a subset of crypto assets, but crypto assets are much more. Crypto assets are digital tokens that eventually will tokenize real world assets. That's when the rubber will hit the road. You can have a digital token that represents a tuna caught in the South Pacific, or represents a unit of fiat currency, which is all a central bank digital currency is, or a house, or a container full of a shipping container full of goods. And the payoff from those tokens, where the way systems will be able to use and work with them, will be huge. So I'm convinced we're moving into a world where digital tokens will become very, very significant. Stablecoins are cryptocurrencies tied to a fiat currency. They're designed to overcome the price volatility problems with cryptocurrencies. The classic stablecoin takes a US dollar, sticks it on trust in a commercial bank, and that gives you something really stable, but that's expensive. So the problem with stablecoins is their promoters keep cheating on the stability mechanism to save money, and then they become less than stable. And if you take that process to the end, you get algorithmic stablecoins, which I think are a complete misnomer. Shouldn't even be called stablecoins. Central bank digital currencies, which is what we're talking about tonight, are central bank money. So think an Australian dollar that's delivered digitally. The only central bank money you deal with today is the cash in your wallet. Everything else you deal with is the promise of a commercial bank. If the RBA issues a digital Australian dollar, you may have central bank money, and we'll discuss what the difference is tonight. But the really important things to think about, and this goes to quite a few questions that came in from the audience beforehand, you can't talk about a CBDC without thinking, is it token-based or is it account-based? Because they're two different ways to build it. Am I talking retail or am I talking wholesale? Because they're two totally different applications. And is it running on a decentralized ledger using a blockchain, which everybody seems to assume it will, or is it not doing that, which is far more likely because blockchains address trust problems and central banks don't tend to have trust problems. So you've got to think, is it token-based or account-based, retail or wholesale, blockchain, decentralized or not centralized? You can't really talk about CBDCs intelligently without keeping those distinctions in your head because they're not one thing. They can be built a number of different ways. And finally, my favorite is NFTs, non-fungible tokens. We've had a boom, we've had a bust. Non-fungible tokens are digital tokens again on a blockchain that represent ownership of images or videos or bundles of rights. But they don't give you the copyright, they don't give you the painting, they just give you an exclusive right to that JPEG file on that blockchain. But there's thousands of blockchains out there, guys, which is why we had a bust. So it's easy to dismiss NFTs. But NFTs, I think the technology of them will be involved in the digital tokens that represent real world assets. So you can't dismiss the technology that was behind NFTs. They'll make a sort of, make a comeback, I think, in a different form. And my big tip is that for all those people who love sticking things on LinkedIn, think how much they'll love an NFT of their university degree. It'll be something else they can put on the LinkedIn, and it will be much harder to forge than a paper university degree. And it always annoys me of my LinkedIn feed, all the people holding up certificates they've done, books they've done, articles they've done. Now they've got something else they can hold up, the NFT of their degree. So watch this space. Anyway, that's my quick run through this world we're trying to discuss tonight. Let's start with our technologist, Barney Tan, on what technology will underpin CBDCs. Over to you, Barney.
Thank you, Ross. And that's a very comprehensive introduction. And in fact, a lot of the things that you've alluded to, especially in relation to the different types of CBDCs, will obviously be underpinned by the technology upon which it's based. So most of us would assume that CBDCs will be based on blockchain technology just because it sort of borrows its name from cryptocurrencies. From the what we see happening in the crypto space, we are assuming that this will be just crypto, essentially sanctioned by the central bank. So if we are looking at a blockchain-based CBDC, it's likely to be token-based, and of course we can look at it in terms of its application either in the retail space or the wholesale space. But with the blockchain technology, it's going to be based on private blockchain, which actually is already a lot it's going to be a lot better in terms of its upsides as compared to traditional cryptocurrencies, because with private blockchain, at least the competitive element of mining is removed. So that removes obviously its environmental impact and makes CBDCs a lot more sustainable. But nevertheless, there are still issues, right, related to obviously, if you are thinking of using CBDCs as a medium of exchange, especially for cross-border commerce, then if every country has their own blockchain, then the question is there interoperability between the chains? How do you ensure that if we are using CBDCs for cross-border trade, those settlements that we're making are still going to be private and secure? So there are still nevertheless many issues, even though we are doing this with a private blockchain that will be controlled by the central bank.
Okay, thank you very much. So let's move on to Michelle. I talked about stablecoins also. How will a CBDC differ from a stablecoin, please, Michelle?
Like you stole my thunder a little bit, Ross, but I'll go into a little.
Sorry.
That's all right. That's all right. I'll go in a little bit more detail. So, you mentioned that CBDCs is basically a digital form of a country's currency. So it's effectively legal tender, and it's a liability of the central bank, and it's redeemable for the local currency. So in a world where our RBA issues an EAUD, it's for all intensive purposes AUD, but on the blockchain. There are different ways of structuring CBDCs, and I know the RBA is looking at that as part of their pilot in terms of how they're exploring it. They're looking at different models like direct liability models, indirect liability models, and pooling, and the use of commercial banks and other payment providers as part of that infrastructure. So it'll be really interesting to see with the use cases that go live in this control environment, what are the preferred models and how do they implement it. A CBDC and stablecoins, people get them confused often. A stablecoin is a token that's pegged to a fiat currency. The main ones that you mentioned are USDC and USDT, which the company holds reserves and is meant to be able to redeem it on a one-to-one basis. There's slight arbitrage between the buy-sell price to encourage people to do it. We have seen algorithmic-based stablecoins, and I agree with you. I don't think they're truly stable. I think they more look like a derivative. We've seen the collapse of one recently this year that has sort of created crypto winter, which is the Terra USD and the Luna. So not all stablecoins are equal. There are also other stablecoins out there, and people often get them confused. You can have other asset-backed stablecoins, but when we're talking about stablecoins in the context of comparisons with CBDC, we're really talking about fiat-backed, so currency-backed stablecoins.
And the big one that gave CBDC issuance a big push around the world was Mark Zuckerberg's plan with Libra, wasn't it? You know, that was what really fired central banks up, the idea that Facebook would have a stablecoin.
Yeah, and I think also what we're seeing with China with the digital yuan, like they're looking to release it. So they're the first country looking at or issuing a central bank digital currency. There's different ways of doing it. I think what's really important is when you're looking at central bank digital currencies and CBDCs, putting on the blockchain doesn't resolve the ability of the central bank to actually honour that legal tender. I think that's really important. So for developing countries, etc., there still could be the risk of, do they hold the requisite amount of currency? Can they actually meet the liability attached to the central bank digital currency? So I think it puts something on the blockchain. It creates this ability of fungibility and movement and instantaneous transactions, but it doesn't remove the risk of a country's digital legal tender. So I think we've got to look at it in sort of that context. But yes, it's a very interesting space, and there's a few countries exploring it at the minute and running different pilots and seeing how and why they would use it. But most countries don't see an urgent use case for it yet, Ross.
Yeah, no, I agree. And Ursula, how is stablecoin regulation, where is it going, and how is it going to overlap with CBDCs, do you think?
Yeah, well, look, it's such an interesting parallel development and so fundamentally intertwined. So, you know, the key things that we're looking at now from a stablecoin perspective is largely still focused on centralized stablecoin models rather than necessarily tackling really with all the might that policymakers and regulators have just yet in relation to the algorithmic stablecoins. So these are stablecoins that carry with them in some shape or another a promise that there will be some stability against a reference asset. And there's three key areas of regulation that we're seeing as a real focus of regulators. The first is trading of stablecoins, and that largely falls within the VASP regimes, the virtual asset service provider regimes that are going around the world to address the Financial Action Task Force recommendations. So exchanges, brokers, and other providers, you know, irrespective of whether they're stablecoins or others, they're in scope. The second and the third really relate to the stablecoin itself. The first relates to the actual issuance model and all that comes with it, including how assets are custodied, what sort of assets need to be behind it, what percentage and so on. And then the last is around the terms that we use. So calling it stable, what does that mean, and what promises and systematic requirements actually need to sit behind that. So you do have a lot of rumination by the likes of BIS, IOSCO and others around broader systemic issues around stablecoins as well. But in terms of the sort of, cold, hard reality of regulation, those are the key areas. And probably, one of the best examples that we now have of stablecoin regulation now in full flight, concrete proposals, is Singapore. So Singapore is looking to regulate single currency stablecoins that are of over 5 million Sing, close enough to Australian dollars. And they are requiring a number of things. So only allowing Singapore-based stablecoins or another G10 currency, and that includes the Australian dollar, happily. They're also requiring 100% reserve backing and capital requirements for that, and that's actually quite controversial. You even have banks saying that that shouldn't necessarily be the case because stablecoins may well compete with traditional bank deposits. Singapore does recognise a lighter touch for banks, but certainly that's a really key focus. Disclosure is in scope, and labelling. So those trading platforms that will have stablecoins on their website will need to label those stablecoins that are compliant with Singapore rules and those that don't fall within and aren't regulated in that way. So a lot happening. Hong Kong also consulting as well, but largely we're seeing the same focus on the structural aspects of the stablecoin, and then of course the sort of naming conventions and trading.
Yeah, good, thank you. And Michelle?
I might just add to it too that Senator Bragg has released a draft crypto bill that's sort of looking at the very issue of stablecoin issuance and CBDCs. As it's currently drafted, there's probably a few holes in it. I think the way they've described and defined a stablecoin is probably too broad, but they're looking at requiring it to be the money backing it to be held with an Australian ADI. CBDCs at the minute, they've drafted it to require certain reporting on the digital one, but I know that they're considering maybe expanding that and creating flexibility to deal with any CBDC issued by any foreign government, foreign central bank over time, and creating sort of regulation making powers to be able to deal with the different models in terms of the design of the CBDC and the distribution, because it will vary on the country in terms of how it's distributed. And so there is some conversations happening here in Australia around some of those things off the back of likes of Singapore, Hong Kong, and what's happening in Europe with MICA too. So I think it will be interesting to see how we play out in Australia. But yes, we're looking at similar sort of things. And what will be interesting to see is how we treat stablecoins issued by Australian entities versus foreign entities, because obviously there's an enforcement issue and like a consumer protection issue that arises, Ursula, and I'm sure that's probably why Singapore is requiring it to be issued by Singaporean banks only. So it just depends on what's going to happen from a recognition point of view, and if all stablecoins will be treated the same here in Australia once we have our regulatory regime.
And I think this is where, some of the proposals we're seeing, Hong Kong's a good example, where they're looking at just expanding the stored value facility regime, looking at the fact that, this is really just a representation of funds held somewhere else, which is what an SVF really is. It's not actually there, it's held somewhere else. But just to modernize that to reflect the sort of tokenized form. I think the key resistance there is as well, that's not going to really work for algorithmic-based stablecoins. But I think it provides a really similar sort of latitude and flexibility. So, it need not necessarily be the bank standing behind as issuer, but it might be that the bank is there as the holder, as the custodian of assets.
Ursula, can I ask you a question there? Because banks currently don't keep full reserves for their deposits, right? In the sense that they lend out their deposit money, and they obviously got capital requirements and solvency and requirements around that too. But 100% almost makes it sort of uncommercial to issue a stable coin. Is there going, and there's always been questions around Tether and Circle in terms of how much they've got access to and the audit of the sort of the backing of the stable coins. In Singapore, is there a recognition that something less than 100% might be appropriate, or are they really going hardline, 100% fully backed?
So 100%, but banks have an easier go, and don't necessarily need to have that if they were the issuer of the, leveraging their own, tokenizing deposits or so on. But I think that at least there's some flexibility in terms of the form in which those assets are held, at least. But you would have to think that if you can get some sort of dynamic risk assessment around, even just the redemptions, right? Just like banks need to do in terms of their capital and liquidity, that you could get to a sensible point.
It's certainly a very difficult time to be a regulator, I think. My heart goes out to all of the Australian regulators because, they had a century to learn how to, regulate a bank and keep a bank stable. And all of a sudden, this landscape is changing so fast from a regulator's point of view. It's really difficult to overestimate the degree of challenge, I think. And
I think a lot of new players underestimate how long a memory regulators have. I was around as a lawyer during the financial crisis. Many of my clients are, many of my young and sprightly clients were not. And so it can be hard you need to convey some of that history, to be able to sort of convey why they think in a certain way, why they might be slower. Certainly in the case of money and CBDCs and stablecoins, I think I hear from regulators it's a generational shift, so it's important to take our time as well.
I think CBDCs I don't think CBDCs, when they're implemented eventually, will change the consumer's experience of moving money that much. They're more of a behind-the-scenes architecture thing. But they're a profoundly different architecture, right, which could have all sorts of implications for systemic stability. If you have a token-based one and you're sending it overseas, you're sending a thing, not a promise. And the law of things is different than the laws of promises. It's a fundamental. I can see why central banks are moving slowly on it. It's more profound in an architectural sense than most changes. So moving on to the advantages of CBDCs, Michelle, what do you think the advantages will be?
Well, I think the main advantages are that it could be programmable. So you could actually create some restrictions around the CBDC and the smart contracts, which could be of great benefit. It can reduce fraud and AML/CTF risk around some of the transactions that happen in the blockchain ecosystem, because there's a better sort of entry and exit point in relation to what happens. There is definitely benefits to instantaneous settlement and the reduction of settlement risk. As you said, most of our system is based on a promise that you'll make good the funds, and that's why we see most transactions take 3+ days, whether it be international or sometimes even domestic. There is settlement risk, and so the system is built on that settlement risk and creating the checks and balances for that. Once you have a digital currency that is underwritten by a central bank, you actually remove a lot of that settlement risk. And I think it's irrevocable and immutable. And I think that's one of the benefits of the blockchain. Once a transaction happens, you can't reverse it. You can only further transact it. And so it allows you to have that benefit of line of sight of what's been happening with that currency. But with it comes, and I'm sure Barney will talk about this, some disadvantages. So maybe that's a good segue for me to pass back to you, Ross.
I can hear Barney picking up each of your advantages and saying it's a disadvantage. Over to Barney.
Well, can I just say that most of the advantages that Michelle has alluded to, they are related mainly to wholesale CBDCs. And that's a completely different proposition as opposed to retail CBDCs, which seems to be sort of in the minds of most people when they're thinking about CBDCs. So yes, indeed, there will be settlement, reduced settlement risks. There will be efficiencies definitely involved, especially with cross-border commerce. But of course, my question to you, Michelle, would be, what is the solution fixing? What is the problem that we're targeting? What's the significant improvement that we're seeing over the systems and the mechanisms that we already have? But with the disadvantages, especially, and if you think about this, right, with the blockchain, it is indeed immutable and it's stored in perpetuity. And more importantly, it is information in the hands of the central bank or the government. I'm not sure how comfortable, people are generally with having that information. Every transaction that you've made, I'm not talking about wholesale CBDCs now, I'm talking about retail. If you are buying things, that information is going to be stored in perpetuity with the government. And with that, right, the government will actually have scope, or rather they will have the ability to craft regulations that could be problematic and open up, the possibility of all kinds of, dystopian future scenarios that you might be able to imagine. Like, for example, can the government, stop you from buying certain products, undesirable products, right, like cigarettes, with a retail CBDC? Can they, impose limits on what you're able to spend with CBDCs, retail CBDCs, on certain types of products? There are all of these kinds of issues that I think we might not be able to iron out. And of course, if you also look at retail CBDCs, a lot of the arguments that have been put forward for retail CBDCs is that, oh, they're great because, especially if you don't have a bank account, if you're in an unbanked country, right? I know that in countries like, I think it's Ghana and Nigeria, they are piloting retail CBDCs already. And if you're thinking along those lines, like, in the developing country context, if you don't trust the commercial banks, it's great, right? Because, then obviously, the money that you have is with the central bank directly. But if you're going with this financial inclusion argument, I'll also say that, in these places, especially in the developing country context, a lack of trust with the commercial bank tends to be also heavily correlated with a lack of trust in the central bank. So I don't think that argument is valid or significant even in the developing country context. And I just want to preface this by saying, firstly, I'm a deep skeptic of CBDCs because sometimes, and you might know this, the more you know about a certain technology and what it can do, the more afraid you are of its potential consequences. I know someone who works in cybersecurity who no longer has a bank account. He keeps all his money in a pillow underneath his pillow, just because he doesn't trust any bank to look after his money. So this is really me sort of understanding sort of the implications that CBDCs could have. If you don't look at it as digital currency or means of digital payment, if you look at it as information that is kept, stored in the hands of the government, then I think it's right to be slightly concerned.
But Barney, doesn't it? I mean, Phil Lowe, Michelle Bullock, Guy DeBell before, these are nice people. I mean, isn't the question which government?
Well, look, the potential for things that may not necessarily be benign or for the public good is always there. And sometimes it's very hard to rein back or pull back from decisions that have already been made. And policy decisions can be made just because for certain justification based on an immediate situation that at that moment may seem right. And because the potential is there for you to act in a certain way, you do. Right, and it could be a higher cause that you're invoking to justify the decision.
Yeah,
Barney,
go on.
I was just going to say the privacy and the full transparency piece, which might not exist with physical cash at the minute. To some extent, it does in the sense that the banks have full visibility about what you do with the promise of your physical cash, right?
Yes,
So and that data is shared with a whole bunch of people under a whole bunch of different regimes. So I think, there is already sort of that transparency piece, but it cuts the other way too. I mean, in the sense that if you had a retail CBDC, you could actually empower people to control their data and what they can and can't do with their data and who they can and can't share their data with and the commercialization of that data. So it can cut both ways. And I think the financial inclusiveness is very interesting because most distribution models involve a bank or a payment provider or some form of payment infrastructure of some kind. So it would be interesting to see how the financial inclusivity is dealt with in a country where commercial banks aren't involved. So I sort of understand your point, but I think there's lots of ways where you can program things and possibly commercialize things and give people power, which didn't otherwise exist in environments. Just putting the devil's advocate, just putting the alternate angle forward.
So my response to that is, if you're programming, how CBDCs can be used, are you actually empowering the people or disempowering the people? Because you're setting rules in terms of how, that currency can be used.
I think it can be both.
So actually, I think, I wanted to touch on a few points. One, I think that this becomes a challenge for stablecoins as well. So a lot of the banks that we talked to about structuring their stablecoins, want the information. They feel they should be monitoring what it goes on with their stablecoin. They should have the ability to remote, freeze or destroy it even, in the way that they program it. And so that issue is live for stablecoins as well. I would just add on the concerns we have. I think there's a really important space for healthy skepticism. But I think that, the turning point for me is to recognize we're not there yet necessarily on the technology. And a lot of the CBDC projects really working on principles. And I think we all agree that privacy of choice, of potential coexistence with other forms of cash and otherwise, they're the bedrocks. And I think there is a recognition that, we might not yet be there on technology. But then secondly, to address the dystopian future is checks and balances. I think we think about that a lot in terms of general governance of our society, but it is equally important in terms of those stop gaps in relation to how, money is made.
I mean, what I'm hearing, surely this is the role of government, and it comes up in all sorts of, to set the rules, and the rules will be baked into a CBDC, won't they? I mean, these are design issues, surely, when the thing is being built, and design choices that a government will make. So some of it comes back, I think, to which government. I think this is a big issue in America, right? Americans don't trust their government as much as Australians trust their government. And Americans also have a very strange relationship with the dollar. I would assert much stranger relationship with their dollar than we have with our dollar. So this is coming back to cultural issues, right? There's warehouses full of $1 coins around DC. They having to keep millions of $1 coins every year. The banks can't give them away, so they stick them in warehouses and put a padlock on the warehouse, because Americans will only use folding stuff. They won't use stuff in coins. But the government insists on making the coins because the folding stuff doesn't last long enough. They've got a weird relationship to money in that country, and they've got a weird distrust of their government. I think you're right, Barney. I think to be skeptical, but it surely all has to be baked into the design.
I think Asula mentioned checks and balances, and I think that phrase is key. So my question then is, what happens in the regimes without those checks and balances, where regimes can simply decide, and there's really nothing to hold them back from making certain decisions about what to do with that information. That is where the concerns are.
So I think I would only just say that some of that is at least attempted to be dealt with through, tiered KYC, tiered access to data, not using blockchain. But I would agree with you, that those things look very nice. But, the question is, push comes to shove, what is actually happening?
Mm-hmm.
I suspect if there aren't appropriate checks and balances, other countries might not have the mutual recognition, Barney. And I think that's probably where it comes down to. So if there's a country that can manipulate their CBDC in terms of the value on the market, or can manipulate the data or use data, they might not be prepared to actually provide the payment exchange functionality with that country. And I think that's how you set the global standard. I think that's how you do it. That would be sort of my gut on it. I don't think that's any different to how countries normally interact with each other in relation to regulated products or regulated markets from time to time anyway. So.
And what I'd also say, I think you're right, Barney, to say it's data. Ultimately, money in the modern world is just data, right? We don't tend to think about it that, but that's all it is. And it seems to me China's leading the world with its ECNY. I think it's going to release that for offshore use at some point. And I think they're going to make it very cheap or free because they're looking to take away some of the US dollar's status as the global reserve currency.
I mean, it's highly competitive, right? And we're already starting to see the US, proposals to block the use of ECNY and sort of the Google and Apple downloadable apps. So yeah, it's already a live issue.
But the point is, once China does that, if it's allowing it for offshore use and it's being used in international trade, and let's face it, historically, the country that has minted the global reserve currency has been the biggest exporter in the world. Britain after the Industrial Revolution, the US after World War II. Why shouldn't China be able to dictate we're the factory of the world? We want to get paid in ECNY, guys. You want to buy our exports, you pay for us in the currency we want. Once that happens in real time, a whole lot of data about those transactions is going to flow into Shanghai, isn't it? And it seems to me that's one of the things that's going to force a digital Australian dollar or a digital US dollar. The Australian or US governments are going to want at least compete in the market for currencies so that they can grab the data rather than the Chinese grabbing the data. It's very competitive.
It'll be a real lead indicator, Ross, of where markets are moving, demand, supply. You can just imagine the utility of that data, and it's not a lag because it's like real-time, instantaneous stuff. So it's like a real lead indicator. So, but I think it creates. I think for you to be able to be that central bank digital currency that sort of overtakes the US dollar, in terms of the currency of choice, there needs to be real trust around the government who's issuing it, the controls and the mechanisms in place. And I suspect there's a bit of a challenge there that will need to be worked through. And I think, other countries might be better placed to be that, first and foremost, I would suspect.
I 100% agree. I think China's big challenge is going to be the trust piece. Do people trust China? But you're right. That data is, these days, if you're trying to decode what's behind an international financial crisis, you can usually work it out about a year and a half later when the World Bank debt tables are all in and you can see what's happened. And that's not very much use if you're running a central bank to know what you should have done a year and a half before. But if you've got this sort of information, you'll see it unfold. As a central bank, you'll see it unfolding in real time. I know about 8 years ago now, when he was chief economist at the Bank of England, this fellow said he had a vision for the future. The vision involved a Captain Kirk chair and a bunch of monitors. And what he thought, he obviously thought as chief economist, he could be sitting in the Captain Kirk chair and he'd be watching the British economy unfold in real time in front of him, interpreted in a way that a human being could interpret: red, yellow, green, lights and things, and where the central bank should intervene. If we get there on CBDC, we'll be getting to something like that Star Trek future, I think, even within an economy, let alone across borders.
Can you imagine the impact it would have right now with monetary policy and interest rate rises? Because we've got lags with every single time they raise an interest rate. Can you imagine if you have real-time data around spending and what's happening and being able to see how it flows through the economy? So there is transparency issues, Barney, but there's also the ability to actually better control the economy and what people are and aren't doing. That might actually help save a future financial crisis, which I suspect we're all looming closer towards by the day.
I think as with most of these technology-enabled innovations, it's always double-edged, and there will be conveniences, advantages, benefits that can be derived from these innovations. But at the same time, I think there needs to be a government with the appetite to rein themselves in. There has to be a government that's willing to listen, perhaps, to the will of the public in expressing their preferences for how this artifact is to be shaped and designed. And that's really to avoid its potential downsides and, all the channels that, an innovation like that is opening up in terms of, the possibilities of abuse. The dystopian future would be if a CBDC is simply going to be used as an instrument for surveillance. And I think, that's not the intention. I think people would generally, resist that. And even if a CBDC is sort of implemented locally in just one regime, inevitably there's going to be outflow, right? Case in point, you for example, we might say WeChat, right? And you could make payments with WeChat, and that's obviously the most widely used Chinese social media platform. But of course, with WeChat, it's not just used in China, right? It's used all over the world. To anyone who essentially have a WeChat account, you will be able to make payments. So my concern then is, if the digital yuan, right, you can make payments with that through a platform, for example, like WeChat, then will people actually be using it here as well? Or will people be using that across the world? And then again, the question goes back to where's that information being stored, and where does it end up?
And I think if merchants are willing to accept WeChat here, they will be using it here, won't they? I mean, isn't that
they will.
Yeah,
absolutely.
I mean,
that's why Senator Bragg's bill's requiring some reportability on the use of the digital one, because they want to know who's using it, who's distributing it, what transactions, and I understand it. I understand the importance of it, but I think the way that the bill's sort of structured at the moment, it needs to sort of contemplate any CBDC, because I think the issue is not specific to China. I think the issue is specific to any CBDC issued by any central bank of any country. So I understand your point completely, but I don't think we'll see a retail CBDC issued by a top G10 country anytime soon, based on the pilots that are being run by the various central banks at the minute.
I think we can at least agree on that. My main sort of points of contention are centered on retail CBDCs, and as with many of these blockchain-based innovations, all of them do right now at this point in time, they still feel like solutions looking for problems. And my question to anyone who tells me about some new fancy thing based on the blockchain is, what's wrong with what we currently have, right? What are we improving on? And the answer is usually very little.
Well, isn't the problem, but I agree on retail, but aren't the problems in the international space at the moment? I mean, the quickest way to make a payment from Sydney to London is to get on a plane with a suitcase full of cash in Sydney and fly the cash to London, right? That's the quickest way to do it. That's pretty bizarre in 2022. I mean, and correspondent banking introduces, if you're dealing with not usual currencies, you might have to go through 2 or 3 banks and incur really quite large fees through the correspondent banking network. So it seems to me,
and it can get lost in payment messages, right? I remember on aircraft deals way back when, you'd sit there on the phone to the bank going, where it is, push it on.
Yeah. That's right. So it seems to me, if it's a solution in search of a problem, the inefficiencies are in the international payments systems at the moment. And if we had CBDCs and we had banks with CBDC accounts, so you had Australian banks with an account with the Thai central bank to do Thai baht, then that could be done directly, with a Thai CBDC without going through all these other commercial banks. The savings should be really large, shouldn't they?
And it gets rid of the single point of failure. So if SWIFT is down, nothing happens, right?
Right.
But I think the risk is, and Barney addressed this before around in relation to interoperability, depends on what blockchains these things are built, what bridges are used, and the risks associated with those bridges. We've seen bridges being hacked and people being able to exploit, weaknesses and loopholes. And so any system is probably going to have to be built on, I would suggest, probably blockchains that can talk to each other, or if not one dominant blockchain, something like Ethereum or something, or we get to the point where we can build really strong bridges which reduce the risk of something going wrong when you're moving from one blockchain to another, because central bank digital currencies have been issued on different ones. So there are some serious interoperability issues that need to be addressed in order to get the real benefits of what you're talking about, Ross. But yes, it should make transaction timeframes instantaneous and a fraction of the cost.
Save a lot of money. And coming to you, Ursula, because because I'm sort of fascinated by this. It's almost like the lawyers are more comfortable with the governance. The technologist is really worried about the governance. So what's your experience in eMbridge? Were the challenges in getting a CBDC to work across boundaries, were the challenges more on the governance side or on the technology side?
So at the moment, where we're up to with eMbridge. So eMbridge, for those who are unaware, it's a project that's spearheaded by the Bank for International Settlements, one of many it has. And the intent is to, for that particular project, is to link the central bank digital currencies of Hong Kong, mainland China, Thailand, and UAE. eMbridge is a settlement platform only, so you trade, you agree terms of trade outside the platform, and also issuance and redemption of a CBDC back to an account with the central bank, and all those rules still rest with the central bank. So where we're up to in that is that the piloting of the actual technology has occurred, and the report's out. And then our work was around the sort of legal and the regulatory requirements around all of that, how money is made, how it all can stitch together, what implications it would be. And we're now moving to the governance phase. So there were really important takeaways from legal and regulatory review, from the technology that needed to move in, will form part of that. But governance is critical. So, some of the key things relate to, in some respects, not wanting a single point of failure, not wanting a single arbiter of truth and of integrity of, and judgment as to who trades with whom, but to establish a decentralized system that brings the best of decentralized models, enables people to trade, respects the autonomy at each individual government level, but enables them to use a piece of technology. Some of the things that we and others grapple with in any of these sorts of platforms is the functional necessity for often having an administrator, even to give effect to the decisions of participants. But, in these models, for sovereign projects, you can consider treaties, MOUs, and so on. But it really comes down to typically contract-based arrangements, because you want more than just the central banks to participate. You want commercial participants to be able to access these systems as well, to solve some of these cross-border pain points. And that's why you move to, establishing that governance framework through contract, through agreement, through various platform, terms of use, and worst case scenario, worked through very carefully.
So it's going well, though?
Yeah.
Project is going well?
Yeah, no, it's I think any of these projects are so interesting, because when you work back, even working back to what a banknote is, right? A banknote is actually a claim against the central bank. And so, for Hong Kong, there's some complexities around the pegging mechanisms. But then again, like, Hong Kong's been an interesting case study, because its CBDC model will be an intermediated model using its banknote structure. So there are 3 note issuing banks in Hong Kong that issue the banks, unlike the notes, unlike Australia. And so leveraging that model is the way it's going to head down that track. But yeah, look, vastly fascinating, but a lot of problems still to solve.
Yeah, and issues that get you right back to the fundamentals.
Right. So, yeah. Well, look, and even, you just get these old horrible concepts in statute, because we've got a legal audience here. The conceptual difference between a note, a bond, even a currency, right? The actual fundamental differences are very slim. So we've got a lot of historical differences that, gave rise to these different structures and regulatory treatment. But a lot of that has fallen away. So you're really grappling with these really outdated laws as well.
So the topic today is central bank digital currency, a global game changer. So where are you people on this? Let's start with Barney. Is it going to be a global game changer, do you think?
Well, I'm not completely sold on wholesale CBDCs, but for retail CBDCs, my answer to that question will be a hard no. I think just, people in most different places would just be deeply skeptical of that technology if they knew what they entailed. And I think just concerns over privacy and security will ultimately override the other benefits that retail CBDCs can bring. Wholesale CBDCs, on the other hand, I am open to perhaps learning more and watching developments in that space.
You're a hard man. You're a hard man. You're a hard man to persuade. But Michelle, what's your verdict on it? Do you think in both?
I think the most likely use case is wholesale. I still think there might be room for retail, but I think that's probably a fair way away. I think we probably need the technology to uplift, have some principles like Ursula said around the governance piece be sort of better built out. There's always issues with DAOs, and so I think that still needs to play out over time, and we need to get a better understanding of what they are, how they should be treated, and what's the best way of governing them too, because there's a separate piece around DAOs and how that would sort of play out into a CBDC. I think wholesale, it's got phenomenal opportunities around international payments, FX, and potentially getting rid of a single source of settlement and clearing, and also managing the risk associated with that. I think with the retail CBDC, if they can get to a point where you can properly implement it with the appropriate checks and balances, it does take away some of the powers from some of these payment providers and platforms, Barney, that contain so much of our data. If you think of the Googles, the Apples, the WeChats of the world, this is like probably an alternate system. So it just will depend on the utility, what happens to the technology, and what we can do from a governance and regulatory point of view over time. But I suspect we're only at the very beginning of the journey, even though we're seeing sort of pilots and use cases and bridge. And I think it will probably develop it will take a bit of time to get to the point where it's overtaking sort of current forms of payment and ways of settlement in sort of industry.
It's interesting what you say, Michelle, about an alternate system to the private providers that have so much data, because that looks as an outsider to part of what has motivated China, right? Jack Ma's wings, Alipay, Ant Financial's wings needed to be clipped, and that was part of why we will push the EC and why so hard to have more control. Yeah, it's a very complicated situation with lots and lots of moving parts and lots of different implications.
100% agree.
Ursula, where do you sit on it as a global game changer?
Well, of course, as you'd expect, I think it's a game changer. And there's sort of three reasons. Firstly, that money has to innovate for the digital economy. Otherwise, currency will be left behind. We'll find, and we already are, other forms of payment. There are also significant pain points as the second one, and not just at the wholesale level. I think it is definitely market dependent. So the issues facing Europe are very different to those that might be facing the Pacific. But I think the pain points are there and are market dependent. But most importantly, I think because money is becoming competitive, it is absolutely essential that we innovate our money to be able to be competitive genuinely with other currencies that may operate. When we say that something is legal tender, it's not that it's to the exclusion of other things. It's just that must be accepted. That means that other things can be accepted. So I think that that's a key reason. And look, I'm excited by the headwinds. So anybody who knows me will know that sort of privacy is always front of mind. Human rights always have been such a important topic. But I like the fact that these are principles that are front and center, and that we're also looking at innovating to solve it, because we will have to solve those issues for things like digital ID to prevent the sort of horrendous hacks that are going on at the moment. So I do think the direction of travel, in solving these very difficult problems, is a good direction.
And I like your point about market dependent, because in our backyard, in terms of pain points, remittances from Australia and New Zealand to the Pacific Islands are an absolute scandal. Right.
Yeah. I mean, if you're there on the the Grand Archipelagos, payments look very different, and yeah.
I mean, if you're working in the Riverina picking fruit, wanting to send money back to your family in Tonga or Fiji, you're paying 10%. You're paying $50 to move $500 back home, which is, the banking system has a lot to answer for, because sometimes it's the Australian bank in both places that are still insisting on moving their money through this antiquated system. The CBDC would blow all of those costs completely out of the water. So I think on the global game changer, what I'm hearing, I think it's going to be a long time before we see a retail CBDC in Australia. Our retail payment system is so good. that if we're going to get it, we're surely not going to get it in the retail place for a long time, because I think the retail space is Barney's, it's a solution in search of a problem, but where's the retail problem? But it seems to me wholesale and international across borders, there are problems that can be solved. But, that's, I will defer to Barney's deep skepticism and his distrust of government, and I hope his distrust of government isn't proven to be right in time on this one. But okay, I think that's pretty much us at it. One final question for everyone wants to jump in, because the question we had before: how does a law student get into this stuff? If you're a law student today, how do you get into doing these things? Any thoughts? Assuming you're not studying computer science and law, because if you are, you're very well placed. But if your other degree is not law, do you just read around on these topics? Do you inform yourself? What else do you do?
That's certainly what I did. So mine sort of was an extension from the practice that I was working in. I've sort of been operating in the fintech space, and as fintech's sort of developing, it's sort of been merging and maturing into sort of the digital assets blockchain space. So I think it's about trying to stay abreast on what's happening. Obviously, don't go blow all your money and spend it on some of these things. But I think it's about reading some of the white papers for some of the tokens out there, exploring, understanding some of the different blockchains, looking to see what governments are doing and what some of the big players are doing in this space. The more you read, I think the more questions you will have. But I think if you just have a basic understanding from a principles, my view is always taking a principles-based approach to these kinds of things. I'm not a technologist. I'm never going to understand all the details around the smart contracts and how the hashing works and the Merkle roots, and I'm never going to understand all that. But I think if you can understand conceptually some of these things and start sort of self-educating yourself, it's good. I think I think some other universities might be starting to provide sort of like actual bespoke courses on some of these things. I don't know what's happening at UNSW, but I think there's a lot of self-learning to happen in this space, and that's how I think most people have sort of gotten there. It's sort of the play and read approach,
Yeah,
Ross.
I agree with that. And I think I listen to a lot of podcasts. There is an awful lot of good fintech podcasts, and it's like learning another language. Listen to it enough and eventually it sort of comes home. So I better hand back to Andrew to wrap us up before we run out of time.
Thanks very much, Ross, and thanks to all our panelists. I hope everyone has enjoyed this great Legal Hour discussion. It's been really wonderful to bring you this topic on central bank digital currency, and it aligns really closely with the work that CBDC, the China International Business and Economic Law Centre at UNSW, engages in. One of the deficiencies, of course, of online, despite all its convenience, is that we don't really get to give a rousing round of applause to our speakers. But I do want to acknowledge and thank all of them. I want to thank Ursula McCormick, Michelle Levine and Barney Tan for such a lively and engaging discussion, and of course egged on by our moderator, Professor Ross Buckley, my colleague at UNSW Law and Justice. It's been a really fascinating and lively discussion, and we're sure you've all enjoyed it. November is a really big month for the faculty, and if this has been a great point of engagement for you and you are in Sydney later in the month, then on November the 24th, we have our annual Hal Wooten Lecture, which is our flagship event at the faculty. And this year we're honoured to have Chief Justice Susan Keeple deliver that lecture. So if it's been a while since you've been on campus as an alum of UNSW Law and Justice, please come back. You can find details of that event on our website. It'd be wonderful to have you join us for that very special occasion. But you've certainly engaged with something tonight which has been really special. And again, thanks to all four of our speakers. And thank you for joining us. I hope you have a good evening. Good night.
Good night.